The broader title of the report is United Capital Economic Outlook. This is for the 2020 edition. It's an investment report that we try to publish every year for those who are interested in investing in the financial market in Nigeria to understand where to put their money, basically. Why did we title it a different playing field? The reason is simple. We've seen some of the policies that the government have put in place, especially towards the end of last year, 2019, and then it looks like these policies are significant and they are going to not only shape how the investment terrain or landscape will be in 2020, but it will also change how both investors as well as operators, the stockbrokers, the market participants will operate in 2020. Some of the policies that I was referring to there included the fact that government, for example, is looking to push a budget, a spending plan for the government of about 10 trillion naira. That's the first in the history of this country. And they are not only doing that, they are also doing it very early. For the first time in a long time, Nigeria is going to be operating a budget that will start from January to December. Previously, what we always have is a budget that gets to be implemented from June and then is staggered through the year. That's one. Another thing is all our tax law or the avenues for government to generate revenue, all of these things are being reviewed so that the Nigerian government can raise more revenue to fund the budgets. And the most popular one is the VAT, your value added tax, which is a tax that you pay when you buy any consumable. If you go to the restaurant now or you buy any item in the supermarket, a VAT, a VAT will be charged. That is going to increase from 2020. Also, in the CBN side of things, the central bank has also changed some rule that will make the size of money in circulation to be a lot compared to what we used to have. What the CBN used to do before is to take out this excess money supply in the system, but now they are letting it enter the system so that the economy can, be stimulated. So this will keep interest rates on debt securities. I mean, if you want to borrow money from government or you want to buy treasury bills, which is quite popular these days, the rates are now very low. It will let the government raise funds at a cheaper rate, or for the investors, they will not be able to get a lot of money for their business. So when interest rates are low, people get discouraged to invest in debt instruments or borrowing to government, because that's about 4% now. Now, what that means is that investment assets that have more risk, they become more attractive because people are looking for higher return on their investment. So as a result, what we've seen so far in January 2020 is people moving away from that very low risk debt security environment to a higher risk environment such as equities, and we've seen the markets jump about 9% so far this year, which is the best in the world. We actually moved from being the worst performer in 2019 to the best performer in January 2020. Trade is one of the biggest issues when you discuss the global economic environment, and that's because of what President Trump is doing, renegotiating all his trade agreements with other countries. And trade war with China was one of the biggest concerns last year. In 2020, if this phase one deal, which is like, a midpoint between what we had in 2019 between US and China, what that means is that you are going to have a global economic environment that is a bit more stable compared to what we had in the previous year. And that's positive for global growth, because trade war is not good for, for anybody, either the US or China or the rest of us, because we're all involved. When the two largest economies in the world are at war, everybody feels it. But a little agreement between them, keep trade going at a faster rate compared to last year. The tension between US and Iran, or Iran, depending on which pronunciation you choose, dates back to a long time ago. Barack Obama tried to sign a deal that Donald Trump does not think is the best. So we don't see this tension going away soon, because that's always been there, and President Trump is a bit quite hostile with the Iranian government. So we don't think it will go away. I think the biggest issue people are discussing now is whether, this recent one is going to be escalated or de-escalated. And from all indication, US, as well as most of the countries that are the largest consumer of oil, they don't want oil prices to go higher. If you escalate what is currently ongoing, Iran can pretty much just shut a particular Strait of Hormuz that is responsible for the largest amount of oil vessels, exactly, in the world. That can push up oil price above where everybody wants it to be. So because Donald Trump does not want that, we don't see him, we don't see World War III as we have been seeing trending on Twitter. We think this will be de-escalated, as we've seen from last week. Oil prices touched about $70, then came back very swiftly to 65. So we think that 60, 65 is the comfort level that we'll continue to see as far as oil prices. Of course, with occasional attack, because we don't think Iran will just give up like that. They will definitely have something up their sleeve. They will attack US assets here and there. Occasionally that will spike oil prices to about $70, but the current dynamics will keep it back at around 65 to 60. Don't forget that the Saudi-led OPEC has also agreed to cut supply further as of last December. All of this will support price from, going too far away from 60, and tensions will keep it around 65. For us, we are very excited at a plan by government to push 100 million people in Nigeria who are currently living below the poverty line out of poverty. The only thing we have concerns about is the method that the government is, trying to adopt. For us, we think the best approach will have been to look at strong reforms that can be far-reaching. The nature of what we had in the early 2000s, we had the telecom sector reform in 2000, pension industry reform, banking sector reform, insurance sector reform, power sector reform. See, I've mentioned 5, huge reform. If I take the telecom sector alone, if you think in terms of the number of jobs it created, in terms of people who work for the largest telcos, people who sell mobile telephone, mobile network, SIM cards, recharge cards, and so on, you will see that is a lot. The telecom sector is one of the biggest sectors in the Nigerian economy now. Even on the NSC, the listed company, when the two companies listed last year, they were combined the biggest sector now on the NSC. That's the kind of reform we want to see going forward. The areas we think the current government can attack if you want to achieve something like that. Take the oil industry, for example. Implement the PIB, list the NNPC like Saudi Arabia has done, create more jobs. Let that corporate entity, NNPC, be more profitable. Saudi Aramco is the most profitable entity in Nigeria. Why can't Nigeria NNPC be the same and give every Nigerian a share of that, this thing? Government should be less, government should allow the private sector drive this economy. Government should concentrate on, making tax revenue rather than, directly going into business. List all these companies and tax them 40%. You make more money than what you currently have. The airports, the school, everything is subsidized. Government should think of how to allow the private sector drive this economy. That way, you create more jobs, you reduce unemployment rate, you increase prosperity in the system, and you actually will raise 100 million people out of poverty over the next 10 years if you put this kind of plan in motion. The position of the CBN at the moment, we think is going to be, on the whole, what you call dovish or expansionary. That is, they will allow interest rates to come down. But the method is going to be not the regular or theory type method. It's going to be a different approach. So you might not see the monetary policy rate, MPR, reduced from 13.5% to probably 11 or 12%. They may keep it there, but what they are doing with this open market operation, selling OMO bill, which is like a treasury bills, CBN debt instrument, you know, they can just actually continue what they've started recently to keep rates low. We don't really think the CBN want to go back to using MPR, or the monetary policy rate, you know, to achieve that going forward.